So you built a personal financial system. You built a personal line of credit that's easily accessible. It's there. No one's going to tell you no. You have growth, protection, liquidity. You have uninterrupted compounding. And long term, like this is going to be setting up your family for generational wealth as well. So what I think that the key takeaway here is you didn't wait, you prepared ahead of time, right? Because if there's one constant in life, that constant is what, Jason?
Oh man, I hope I get this right. I know you're always asking me this. I think it's change, right?
Change, right? Yeah. Welcome to another episode of Wealthwise Banking. I'm here with my co-host Jason Patrick Sipple. Welcome, man. How you doing?
I'm doing fantastic, man. I am I'm running races, I'm sprinting down the street, I'm moving really fast, and you're laughing because you know none of those things are true. And
No,
what we're
you,
going to talk about today is something that's been a long time coming. I've earned it, and you wouldn't even look at the photos I sent you, brother. I don't know why.
yeah, no, you had a major family event this past week. For those of you guys who don't know, Jason's been in Ironmans on and off throughout his life. He's a competitive athlete, but that kind of wear and tear like starts to work on your body over time, right? And so Jason is actually sitting down on the episode today because he had surgery, and it wasn't a minor surgery. It was a gruesome, grotesque, nasty photos that he sent me that I was like, yeah, I'm not looking at those. No thanks.
I tells
So
you, and Jeremy, as tough as you are, what you've seen in life, that still shocks me. I still think it's a little bit funny. So I'll probably keep poking you about that. And as we're talking about this, I've got another friend right now who, you look at, well, I used to race, and you say, oh, Ironman, one of the hardest races in the world. I've got a buddy right now I think it's called the Great Divide Race. He started yesterday, 2,700-mile bike ride. And for you that aren't from the US, 4,300 plus kilometers.
no.
That's a long way. He's 215 miles into it right now. But anyhow, we're here because we want to talk about preparation. We want to talk about what I just went through and how if this had happened 5 years ago, if I probably took care of it when it needed to be first taken care of, I would have been a completely different experience.
Hmm.
Right.
Yeah, because it wasn't a major, I mean, it was a major surgery, but it's also something that happens, thank goodness for technology. It happens more often than regular, right? So people do have this kind of surgery pretty frequently, but nonetheless, it is a major surgery at the end of the day. And, with you and your family, and make no bones about it, like Jason is the primary income earner in his family. I think that preparation that he had going into the surgery and how he did it both economically and the peace of mind he had with his family. That's what we really wanted to talk about today. Is like, how do you prepare for the unexpected? And then how do you plan for things that you know that need to get done, but you may not have been putting it off for years? So that's what this episode's about today.
And this episode's about doing, it's kind of, I think about Seinfeld all the time. I don't know if you're a Seinfeld fan, but if you're listening and you remember the episode where George Costanza, he starts doing everything that's the opposite of his intuition. And by the end of the episode, he's got a job with the Yankees that's super high paid. He has no idea how he got it. He's got a beautiful girlfriend that there's no way she would even look at him in any other episode. And he's got everything going his way because he does exactly the opposite. What we're going to share with you today is going to feel a little bit like the opposite of what the normal is. But when you start hearing the math behind it, when you start hearing the peace of mind behind it, you'll start understanding why it's so important that we share this episode with you.
Yeah. So let's stop putting it off, Jason. What did you have done? What happened, man?
Oh, we didn't even say that yet. So I just had my I am now titanium plastic ceramic man because I have a new titanium left hip. So
Mhm.
you can call me left hip sip, and by the end of the year I'll be two hip sip. So
Yeah, because you have another one coming up too, don't you?
I do. So this is just the practice for the next one. I already learned what not to do. This is why I'm sitting today because 24 hours after the surgery, I stood for 5 hours, and that was not smart.
Yeah. So a major surgery like that, what is something without insurance, what does something like that cost, Jason, to get a hip?
Between 20 and $40,000.
Oh, all right. That right there, by and large, would wipe out most people, like financially. In a previous episode, we talked about savings rate, we talked about credit cards, $20 to $40,000, even if you have insurance, is going to create anxiety around people. So talk to us a little bit about why you didn't have any going into the surgery room.
Let me talk to you about the surgery morning first. Let's kind of walk through the journey a little bit. And so it was super early. They wanted us at the surgical center at 5:30 a.m.
Well,
And so I woke up ready to shower at 4:15, and it felt like race morning. I love being at my races early, having my bike on the rack, one of the first athletes in, getting everything set up, getting my pre-meal in. That's what it felt like, Jeremy. I didn't feel anxious. I felt excited. And I shared that with you before the episode, right? Like it's like when we get excited, you usually have to go to the bathroom before. So I remember getting up, showering, got the Patty and Connor came with me. I remember going in, signing the remaining paperwork, confirming my birth date, what was happening, making sure that, they're gonna operate on the right hip, the correct hip, not the right one, the correct one, the left one, and going through those things. And I just felt excited. I didn't feel anxious because we had done a lot of the work prior, right? And of course, I was nervous, like when they're making you take off all your clothes and put on the hospital gown, and now you're butt naked, and they're coming in to make sure that your surgical area is prepared for the surgery, and they start putting all the IVs in you to give you the medicines you're going to need for the anesthesiologist and the anesthesia. You start getting nervous because anything's possible, right? Like you sign all the paperwork, you sign all the things about your will. Like there is the positive of, hey, this is going to be life changing for me. And I'm excited. Like I don't want to live the way I'm living where I can't put my sock on anymore, where I can't do the things I love doing, where I'm just not mobile. Like we're not doing a lot of the fun things as a family because I'm not as mobile as I was a few years ago. And as I'm sitting there and they're getting all ready, and Patty and Connor's just hungry. He's like, man, can we go yet, Dad? Can we leave? Are you done? Like, are they going to take you away? Because I was there from 5:30 to 7:30 before they wheeled me in. They stayed until they did the local anesthetic, like the spinal tap, and then they took me off to the surgery. And some of the paperwork I signed was about the will. Some of it was about making sure we have do not resuscitate, like all those things. So there's a little piece of that in my head as well as I'm going in the surgery. I know nothing was going to happen. It wasn't my day. I could tell. But still, there's a little bit of concern. Like you said, I'm the provider. I'm the one that takes care of the family. Like I'm the one that's going out and making sure that we have the things we have. So,
yeah. Sorry. So there's really two concerns at this point, right? There's the economic concern. You got your family sitting in the waiting room. They're looking at you, they're staying with you, they're watching you go back into the waiting room. And there's the economics of, all right, how do you handle this situation? How do you handle something that's 20, sometimes 40 grand, even if you have insurance? But then also you kind of tapped on another thing of if I don't wake up, if something did happen unexpectedly in the surgery, because guess what? Things happen, right? It does happen. You also had a different level of peace of mind. You had clarity on both sides. You had peace of mind on both sides because of a way that you prepared ahead of time, right? So you got Patty and you got Connor in the waiting room. They're having their breakfast while Dad's getting his hip replaced, and everyone's counting on things to go according to plan. But you and they did. You woke up, right? So everything worked. Everything worked out well. Talk us a little bit about kind of both of those things, the preparation you had to do both economically as well as, how do you provide for your family if you weren't here?
yeah, so let's talk about the preparation first. We'll get to the second question. But the preparation was it was a lot of research. Like Patty took a lot of this on. You want to talk about specifics? You want me to get
Yeah.
into some? So we were first quoted and we learned a lot. Like we've learned a lot. Last year, we had traditional insurance, and when we went to renew, Jeremy, it was going to be $28,800 for just Patty and I. So we were like, no way, no how. And that was one of the big providers, right? Like Blue Cross Blue Shield or one of those. It was going up a lot of money. We're like, no. And this is before I knew I needed the surgery. This is before I had even been diagnosed. Like I thought it was still back problems. Like I had been misdiagnosing the pain in my life for years. For years, I just chalked it up to having a bad back from high school, from lifting and, football and all that stuff and surgery at 26. And I had been misdiagnosing the pain. And so the first thing we did last year is we're getting more proactive with everything. We said, okay, well, we're not going to do this anymore. It doesn't make sense. We're not going to pay 28,800. We don't go to the doctor. We're super healthy. We eat healthy. We take care of our bodies. We exercise. And so we switched to private insurance. That was already a 50% savings.
Hmm.
But with private insurance, you pay out of pocket. So you tell the providers, and I've learned this over the last 5.5 months, 6 months, is you go out and when you go to the doctor and they ask you if you have insurance, I don't have insurance. You do, but you don't. So you pay out of pocket, you get the bill, and then you get what's called a super bill, which Patty has figured out. I don't know any of this stuff, but you get the super bill and you submit it for reimbursement and you get reimbursed. So after all was said and done, all the negotiation, because there's multiple things that go into a surgery, and I'm probably telling you more than you need to know, but there is the doctor's fees, the facility fees, and the anesthesiologist fees. So there's three separate bills within the one surgery. And so through communication, through things as easy as Patty saying, "Hey, give us a deal," to an anesthesiologist, saved us $600. Like we went from 24,000 to 21 and change was the total cost of my total hip.
Okay.
So that was our actual cost. But
All right.
so let's pause there,
You,
ask me questions there, and I'll keep.
just to recap, so you had a surgery coming up. You
Yep.
guys looked at your previous insurance, regular insurance that was going to just to renew it was over $28,000. Not to mention, I'm assuming that if you did activate it, you still had additional, funds.
Deductibles and everything else. Yep.
So 28K, and you said, no, I'm going to step back. I'm going to go into private insurance. I'm going to pay out of pocket. And
Yep.
by doing that, it automatically, because we know hospitals actually charge more for people with insurance, you got savings. You were able to negotiate your bills down to 21,000.
Yep.
So you already made a savings, a 50% savings by going from traditional insurance to private insurance, and that gave you the opportunity to actually negotiate your doctor bill down even lower to
Yeah.
21.
And what I just realized in this moment, I actually didn't realize this in the writing this episode and talking about it and reflecting on it, but I just realized right now for everyone listening is why we realize this is we're closer to it. This is the closest we've ever been to these scenarios, right? We're making phone calls to the doctor's office. We're getting routed around. As we were coming up to see you last time when we saw you a couple months ago, Patty's on the phone talking to the doctor's assistant, talking to the office, asking, "Hey, how do we find out how much this is going to cost? What are we going to do?" Uh, and getting routed around. And so our insurance is half as expensive. There's no deductible because we're paying out of pocket. And then we're getting the super bill and we're reimbursing it. So already we're in a different position. And we didn't expect me to need both hips done this year. So this is a 40 plus $1,000 total expense for this year for our family.
Oh, okay. So
Okay.
keep a story going, man. This is fascinating.
So from there, we had already set up our four savings plan. We talk about it all the time. It is our specially engineered whole life. It's our whole life that we are intentionally putting at least our 10%. Like we put 31% into our five policies. So that was the first thing. Once we knew how much it was going to cost, we were able to go and say, okay, well, where do we have this liquidity? How do we pay for this out of pocket? And so we went and we took a loan against our policy that we had proactively already paid the premiums on. That's the first step. I can go deeper into it, kind of guide me, tell me, because I can tell the whole story in one thing, but I know we kind of want to share all of the different intricacies of this.
Yeah, so why would you use, I mean, that just sounds kind of weird, right? Why would you use whole life insurance as a forced savings vehicle, as a peace of mind fund or whatever? Why would you do that?
Because I wanted to make sure that all of that money kept compounding. And then the flip side, like you said, things happened. I wanted to make sure if I'm no longer here, my family's protected. So now all of the money I need for the surgery that I took a loan against, all that money is still compounding. It's still uninterrupted. It's still most likely earning us a dividend. And God forbid something happens on the surgical table, my family is going to have plenty of time to recover, get back on their feet, and be okay without me.
So the alternative would be, hey, let me put my money in a high yield savings or in this sort of CD or something like that and earn basically a higher rate of return, right? That's where a lot of people would keep a peace of mind fund, a forced savings vehicle, if you will, which is good. But to your point, you also are getting a protection benefit from this. You're also earning a dividend and you're also getting compound interest inside of the policy. So when it's engineered correctly, when it's engineered exactly what you're talking about, it's high cash value. That cash value is immediately available. You fund it, and it's there in the first 30 days, right?
Yep.
Traditionally, the way that most people build these things, there is no cash value. And that's why the Dave Ramsey and Suze Orman of the world, they're absolutely correct because those policies were not engineered for liquidity. They weren't engineered for the types of protections that you're talking about. So you prepared ahead of time by having these policies in place. You build out a sizable cash value and you use that to actually fund the surgery. On the backstop, if something happened to you, you also had a tax-free death benefit. So this one policy gave you peace of mind in two areas of your life. One, financially, where you are today, living, breathing, going
Yep.
into the surgery, and also protection for your family. Should something happen to you, you know that Patty, Connor, and Diego, they're already taken care of as well.
Yeah, and it gets better, right? And it gets better. When we walk in that morning, like I said, it felt like a race when I go in, we walk in, we have the loan ready, right, to pay for the whole surgery. I'm not using the loan yet, Jeremy. The loan has been taken. The loan is into our segregated account or that separate bank account we use for the policy. So we've taken the loan, the money's there. When I got there that morning, I pulled out our Wells Fargo card that we use that we get 2% cash back. I paid for the whole surgery on the Wells Fargo card, earned 420 some dollars, right, in cash back because I'm going to take that loan and pay off that card. So whether you're going airline miles, whether you're getting cash back, I'm showing you a different way to approach change that's going to happen anyhow. How can you be proactive and make it so it's a win-win for your family? That's what we're talking about.
Yeah. So you actually kind of leverage the system in its own.
Yes.
So many people, they give you these points, they give you these benefits, hoping that you will charge $20,000 on a credit card
Yes.
and take on 17% interest. But to your point, you use the system, you use the policy itself to actually pay down that loan, and you just took the bank's money with you.
Yes. Yes. So I made what we negotiated cheaper still by getting the points or the cash back, right? By getting the extra 420 some dollars off of the whole total bill, because that's going to go back to paying the card back and we'll take the loan and pay it back. And then we're going to reimburse that to or take that super bill we get from the doctor's office in the hospital and submit it to the private insurance. And then in another episode, I'll share what that whole thing shakes out like because we're learning still.
Yeah.
So,
So let's talk about this. Let's talk about the consequences if you don't put the money back into the policy. And then I want to hear a little bit about like what is your plan to refill the cash value so that you refill your peace of mind fund. So talk to me a little bit about both.
yeah. So, A is the one where we are learning, right? We're still in this process. So, I'm documenting the journey and sharing with you guys real time. Is we're going to get the super bill. We've already requested it. It seems to take a little bit for everyone to find all the codes and everything they need, but they get that super bill. We'll submit that to private insurance and I imagine it seems like we're being reimbursed between like 80 to 90% of whatever the out of pocket cost is. So if that comes back at 80%, it'll be a little over $16,000 will be reimbursed. That'll immediately go back into the policy,
Okay.
right? And now the additional money owed, we'll figure out what that is, and we'll reimburse ourselves by setting up a loan repayment plan to pay that back before I have the next surgery. And then we're just going to rinse and repeat and use the same system over again.
Basically, you're going back to the first law of wealth of paying yourself first and paying yourself first. You're using the policy as a personal line of credit. You pulled some equity out of the policy to pay for a surgery, but now there's this gap. There's this emptiness inside of the policy, right? There's a deficit. By paying yourself first, paying yourself with interest, you're actually refilling that line of credit. So that way it's there, it's easily accessible again. You're restoring the full protection amount in the policy. You're also restoring all of the cash value that you built up. Meanwhile, because you ran the money through the policy, you're maintaining a dividend and your policy is still growing and compounding. So it's just proper money patterns that you're implemented
That's it.
to more or less recapture and save yourself. It sounds like tens of thousands of dollars by going through this process. You walked us through like literally a portion of the healthcare system in the US, how to save money on that and how to become, for lack of a better word, self-insured. Do I dare say that? Self-insured?
Yeah, well, I mean, it still is insurance, but I think it's more along the same. My understanding of it so far, it's more in line aligned with these carriers, these mutually owned dividend paying companies. It's more of a mutual system. right? Because you're paying X amount into it and then you're only using what you need and then you're getting reimbursed on it. And so it is a more equitable, fair system. And we're finding it is one ugly system when you start looking at regular insurance and the cost of it and the deductibles and trying to navigate. Jeremy, they couldn't even tell us who to talk to. Like Patty was talking to the same person multiple times. Like, I just talked to you. And one of the guys' name was Jeremy. He's like, Jeremy, I know you sent me to teach or to talk to Sarah, but Sarah said I got to talk to Jeremy, and then then sent me to another person, and it was around and around. But once if you have the patience to navigate that, like we've saved tens of thousands of dollars, like just with the private insurance versus regular insurance, it's $16,800 a year difference.
Wow.
That
That's
almost pays
incredible.
for the hip itself.
Yeah, absolutely. So
And
when
then
we're
where do you
looking,
put that money? You put that, if you save that money, you pay yourself that money. Where does it go? It goes into your for savings plan. It goes into your banking system, as we talk about, right?
yeah, so you built a personal financial system. You built a personal line of credit that's easily accessible. It's there. No one's going to tell you no. You have growth, protection, liquidity. You have uninterrupted compounding. And long term, like this is going to be setting up your family for generational wealth as well. So, what I like, I think that the key takeaway here is you didn't wait, you prepared ahead of time, right?
Yeah.
Because if there's one constant in life, that constant is what, Jason?
Oh man, I hope I get this right. I know you're always asking me this. I think it's change, right?
Change, right?
Yeah.
Yeah. I've only asked
I
you
could
this
hear
for the
your
last
mom
seven,
saying it
8.
with us, by the way. Your mom, hello, Jeremy's mom, and hello, Artem's mom. I know you're two of our listeners, so hello to both of you. And I know you knew the answer was change as well. So.
No, that's great though, man. Like you did a great job. You gave your family protection, you gave them peace of mind because you prepared ahead of time. And I think that's the real takeaway from this. And fortunately, your quality of life is also coming back. So now you're building up more memories, more time to actually spend with that family of yours, the beautiful family that you have there. And that's what I love about the story is you made your quality of life better while giving yourself and your family more peace of mind and more comfort. So
And brother, thank you for saying it that way. I am hopeful. So, guys, gals, everyone listening, I appreciate you listening to this. I can lift my foot higher than I could before the surgery already, and I am super bruised and swollen and all kinds of sore. So I already know that I already feel hopeful. And that's the first time that I felt that in like the last 5 years of kind of identifying this pattern, this movement pattern. Like I've spent tens of thousands of dollars working with coaches trying to get more mobility and fired him because I'm like, listen, dude, it's been 15 months of coming to see you twice a week and doing this at 3:30 a.m. I was getting up, Jeremy. No more mobility. You can't move if you're bone on bone. And so like this whole experience and the fact that it went so smoothly, I had to share. I had to let people know how we did it, why I felt so peaceful doing it, why I felt so hopeful doing it, and then just how our money kept working for us and how we're going to repeat the system, even improve it more. Because as we go deeper into this private insurance, I'll share more about this. Not saying, hey, go do the same thing if you're an entrepreneur, but if you are and it meant something to you, definitely go to wealthwisebanking.com and book a call with myself, book a call with Jeremy, and start learning how you can be more proactive. Because I set this system up, Jeremy, 4+ years ago.
mhm.
Like we're going into year 5 of this system. And so it's been set up and running for a while. I didn't know I was going to need my hip replaced. But what do you say? What's the one constant? It's change. We know it's coming. So are you going to be proactive or reactive to the change in your life?
Yeah. So again, if that matters to you, go to wealthwisebanking.com. We'll look at your system, your situation, how you can actually start setting up that peace of mind, right, for your family, that clarity, that sort of protection. So with that, man, let's go ahead and close it out. You're already in banking, Jason.
You're just not the banker yet.
All right. Thanks for telling your story, man. That was really powerful.
I appreciate it. Thank you all. See you in the next episode. Be blessed. Thanks for joining us on Wealthwise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.